Rattan Keswani joining us now, Deputy MD at Lemon Tree Hotels. Mr. Keswani, good morning. Good to have you with us once again. It's an incredibly difficult situation for the sector with the current wave. Once again, really hitting industry hard. How is the sector, how is the company grappling with the situation on ground currently? Just give us a sense of how things are on ground.
Hi, good morning, Abba. Well, I think you used the right word. We are right now grappling. I think we are seeing the business kind of go back to the levels that we were at Q2 last year. And in a manner of speaking, our worst fears have come true. And we had talked about it about 3 months ago, that the worst that could happen is another wave, and then that could hit us worse. But thankfully, we are prepared from, keeping our hotels open, keeping our costs tight, to be able to tide over this time, at least for the next 6-7 months. It's very difficult to forecast how long this downturn will last, and at what point of time do we start to see an uptick. Summer was showing a very positive behavior in forecasts, but in a manner of speaking, we are about close to square one.
That's just what I was going to ask you next, that, we had started to see that uptick and we're preparing, for summer and especially lots of new hotels and so forth. But now it looks like all plans will be on hold. In light of that, at this point of time, in terms of a strategy, is one looking at room rates? Is one looking at any attempts to lure customers? Or is the focus more on just maintaining, a sense of calm and waiting for the worst to kind of worst of the situation to fly over?
Very much the latter, Abba, because dropping room rates, etc., is worked on a basis that you would be trying to find a segment to move. Right now, because of travel restrictions, quarantines, shutdowns all over, and curfews, price doesn't seem to have any consideration set for you. It's about trying to find where there would be a traveler, either for business, leisure, maybe a bad word right now, but at least to kind of staycation somewhere, work somewhere out of home or from their normal circumstances that we've gotten used to. But this is a very, very small number. It's about biding time right now for the next 3 or 4 months and hoping that the vaccination drive brings back a little bit of confidence. People hopefully start to, behave themselves as they weren't. And watching this space maybe in July and August to see how we're going. We thankfully opened a hotel in Bhubaneswar 10 days ago, and we were hoping to open 4 more hotels in the next 45 days. But those hotels, unfortunately, got stalled by maybe a couple of months more because the labor and team members can't move around, neither can the goods reach the hotel right now. So 4 of those are on stall, but I'm very confident we'll open them in the autumn. But right now, it is biding time and hoping that tightening of the belts will help us survive at least the next quarter.
How much of your fixed cost you managed to cut? And how much of a variable cost which is gone will not come back? Because this pandemic, in a sense, has forced all of us, including the media industry, which I represent, to rework at a revenue lines and a cost structure.
So, I would not be prepared to give you figures right now because we're close to declaring our numbers for last year. But fixed costs are very difficult to cut in our industry. So unless and until within those fixed costs, there is some assistance that is provided in some form by the government in terms of unit costs to be turned around or minimum charges to be brought down, which hasn't happened at all. The only benefit that we had for a certain amount of time was a moratorium on the interest and principal payments. This year, there's nothing that exists. So as much as you could trim your fixed costs, in a matter of speaking, was something to do with payroll and how do you manage it, though that's variable and semi-variable in some form as well. But what has happened is over the learnings, we've been able to trim our variable costs by over 30-35%, as much as business and average rates also came down by about the same percentage, which is what kept us cash alive right through the year. And we will have to continue in that mode for the coming 6 months at least.
Okay. What happens to the smaller and marginal players? Is there going to be a massive market share shift to, let's say, the Taj brand, your brand, which are in a sense national chains, much more efficient, they have ability to lend, you've got good investors. Do you think we could go through what could be called as a major restructuring or a major change in terms of small getting marginalized, medium getting hit, and big chains like yours getting mega chains now?
Well, as you know, in a difficult time, there is always a positive and a negative to it. I think this is bound to happen. We had thought that this would happen within the first quarter itself, once the moratorium periods and all the other parts of little assistance that we got would go through. But uniquely, it is not yet showing anybody coming to the discussion table, either through the banks or through the ARCs or through companies that are involved in restructuring. But I do believe it is bound to happen unless and until the individual players or the smaller players were working on ancestral and historical values of their business and therefore had a cash flow to be able to carry themselves further for a couple of years, in which case they would definitely hold on and not obviously exit the business. We expected stress. I think we continue to expect stress and therefore certain opportunities for the larger players, but it's not somehow visible so far in India for the moment.
The difference.
It's funny, you know, while you spoke of some of the redeeming factors such as cutting your variable costs, as well as the overall moratorium. Just wanted to understand from you, is there anything else that the sector is wants from the government in terms of rebates on electricity charges, or do you think that as of now the steps that have been taken won't really do a precious little because the sector has been beleaguered so hard and there's a lot more ammunition needed from the government?
Well, as I'd say, precious little was done last year. We've given all our requirements to various state governments, central bodies, through HAI and FAITH, pretty consistently with the requests that we had. But in my personal belief, precious little will happen. So in essence, as we were last year, we will be this year, we shall be on our own.
Okay, fair enough. Do you, going forward, give us a sense as to when you think with this vaccination drive hopefully picking up and things improving, by when you're likely to see an improvement going forward? When do you see an overall change in the demand trends, that confidence slightly picking up? Do you have any sort of a ballpark estimate that could had happened by, say, July or August? And how crucial is it, do you think, that now hotels have to look at safety as a #1 priority?
Well, safety became a #1, will continue #1 in terms of the customer's requirement, and therefore the stable players will definitely pick up much earlier than some others will. It's very difficult right now to forecast at what point in time and at what rate there may be an improvement. I think on your next panel, you should call in some astrologers to help out the hospitality industry to forecast something. It's very difficult. Having said that, if the second wave kind of starts to drop down and we don't inherit a third one, and the vaccination drive carries through with a very strong tempo, earlier we were all hoping to see some green shoots by autumn. I think autumn will be too early. We may see some green shoots in the last quarter, and maybe the summer of next year will start to bring us back a bit. But I think it'll be delayed another quarter to even showcase some elements of segmented behavior, something that you can watch on trends and the confidence that comes out of a vaccination drive. The vaccination drive is right now our biggest hope, and the fact that there is no third wave. But the impact of those very difficult forecasts in terms of numbers.
Final question, the difference between the first wave and the second wave is that in the first wave, the fear was more, casualties were less. In the second wave, fear is, I won't say fear has died, but fear is certainly less because of vaccines. But the number of casualties are, or the number of cases are certainly much higher. How does that impact you? Fear versus number of high cases.
See, I do believe, I mean, this unfortunate statistics are not impacting business or, how we feel. Both parts of the statistics were worrisome, continue to be very bothersome right now. And I hope just for our citizens and for our world that we come out of this as quickly as we can. The numbers are worrisome. The impact of, curfews and shutdowns is extremely worrisome. The vaccination would at least help build confidence and get people protected. I'm just hoping, and that's the only thing that we can live with, is that the citizens finally understand that just the hygiene habits are what are the best vaccinations for us, which will help them work, which will help them travel, which will help them unwind in the future. The vaccines will be one more booster shot to that whole exercise. But the critical vaccine is distance, the critical vaccine is hygiene, the critical vaccine is mask, and as long as they can do it in public spaces, hospitality will be more than happy to welcome them and service them in the best possible manner to help them tide over the next day.
It's a great point. I think we'll try to amplify your message that hospitality industry is ready to open their doors for the entire vaccination process. Appreciate your time. Stay safe, and
you too. Thank you very much.
Hope to see much more of you going forward.
Have a good day. Bye-bye.